Look, as loan officers, we just have too much freedom in this industry to go in any direction that we want. Unlike the guidelines that come with the mortgages that we offer, the black and white rules to pushing us through that process of being able to finance that loan, well, we don't really have those rules and regulations with our mortgage business. Typically what happens without that is we find ourselves on this emotional roller coaster, and we don't know if we're gonna have an up day or a down day. And depending on that day, if a loan gets in our way or a referral source distracts us from our growth, it really takes the wind out of our sails. And what happens is we have a hard time growing relationships. So what we really develop on in the beginning stages of my course is we work on your mindset. And for the ones that don't work on their mindset, what happens is they start to get busy again and they forget about the problems that come with the cycles that are in the housing industry. They start getting units coming in the door. They start having paychecks coming in the door. And then what happens is we go through another housing cycle and they find themselves at the bottom again. So when we focus on our mindset, we're really developing the skill set to understand the difference between monetary wins and relationship wins. And when we're developing on our mindset, we're also working on the 4 pillars of your personal growth. Those 4 pillars become extremely important as a merger into building relationships, and we'll get there today. So the first thing that we have to focus on is retooling our minds for more energetic wins with relationships, for more sustainable growth and continuous business or deals coming in the door. When we make a transition away from financial gains being the reasons why we feel we're being successful, and we focus on relationships being the reason why we're growing our business, the deals just start to come in. And because you have a relationship with that person, there's a much easier handoff with that business versus focusing on a transaction or focusing on how many transactions somebody can bring to the table for you. And when we make this transition and you focus on your mindset and the energy that you get out of a relationship and the directions that you want to take your personal business, then we can continue to grow that in a way with very little friction and very little pressure from our referral sources micromanaging us through this process. So what happens when we build relationships and we focus on those being the successions in our growth versus the transaction, the deals just start to come. So by developing our minds and putting our minds in the right direction, we start to shift away from being really on this emotional roller coaster of where's my next deal going to come from? Or I'm just getting really burnt out, I might get out of this industry. Or worse, getting into management. Now, a lot of reasons why managers end up where they are is because they get burnt out in the origination game. But the problem is they don't develop the skill sets to grow the residential transaction business, and they just become great at hiring or running the operations side of a business. So when we all find ourselves in times of despair where the deals aren't coming in the door as easily as they were in the peaks of the market, we're not quite sure what to do. So the managers don't necessarily have the skill set. And that's why they'll say, go chase real estate agents, because maybe that's what worked for them in 2008 when we went through a cycle like this. Or 2016, Janet Yellen raised interest rates. She was pumping up prime rates. Refis completely dissipated and it was all about purchase business. But people were still buying because the rates were still there. They weren't looking at an old 2.5% to 3% interest rate compared to today's 8% rate. In 2016, refis fell off because they were looking at mid 4% rates up to maybe high 5s, low 6s. So just enough to not find a benefit in a refi, but not enough to stop buying real estate. In today's environment, if you're solely focused on real estate agents and that's been the only thing that you've been doing to grow your business and they don't have the business right now, you're gonna feel really compressed, you're gonna feel desperate, and you're gonna be looking to take on any deal you can from anybody. And the people that we let into our lives, into our business, they determine our long-term stress and success. So when we focus on our mindset, we focus on developing the right type of relationships. And we're not just looking for deals coming in the door, we're looking for real relationships. And that's what gives us the foundation to our business before we can really start working on growing our business. I call this the foundation. It's essentially, without it, it would be like having the roof of a house without the foundation or the framing. So once we've got the mindset established to push through these negative movements in our minds, these negative pitfalls in the industry, then we start to focus on what I call your personal business guidelines. What we do by developing your personal business guidelines is we've got to teach you how to be different from the rest of the herd. So we start with branding. And the reason why we start with branding is because we need to make you different from the majority of the other loan officers out there. And we've got to focus on being different. When we focus on being different, we focus on relationship building. And what we do is we develop bringing your authentic self to the forefront and who you are as an individual. And who you are as an individual will be part of your beliefs, your frustrations, the things you love to do, the things you hate to do. And essentially, by understanding who you are as an individual further more than you do today, your brand, your personal authentic self, that becomes the gateway of people being allowed to come in or out of your business. And what we do is we start to make your brand more about who you are as an individual. And those are the things that people begin to love about you. And what we have to do is we create this brand so that we can find a parade of people that follow behind you for who you are. So many of us get accustomed to being a chameleon in this sales type mentality where we go out and try to act the way that we believe that referral source needs us to act in order to get their business. And what happens is we start wearing too many different mortgage masks, and we're dealing with these people far differently than our actual core beliefs. And what happens there is you get burnt out in your day. And really you're being somebody completely different than who you should be. When we begin to focus on our core authentic self and that becoming the brand of why somebody wants to work with you, we establish more authentic relationships. And what this does to your business is it takes it on a more friendly path. And what it does is it allows you to build your business based on relationships versus being a mortgage loan outlet. And once we've got that core brand built to the forefront, then we start to build out 7 different segments as to where you're going to be getting business from so that we can reduce market shift. So when you have 7 different segments built out and the market shifts, if you've got establishment in each of these 7 different segments, you're going to naturally start to get busy somewhere else far before the rest of the market's even going to understand that that's a segment as to where they can get business from. So I'll give you an example. In 2020, I have built out this business model for years leading up to 2020. I started getting busy with refinances, just like most of us. Then the banks ran out of money and rates went up. Then the Fed stepped in, started buying mortgage-backed security, and the rates went way down, and everybody was refinancing. But what also was happening is I started to get really busy with real estate agents. So half of my week was focused on building relationships with real estate agents, and the other half of that week was focusing on continuing to take my refinances. So maybe I did a little bit of refinance in the morning, and the rest of the afternoon was all real estate development. I was the only one out there building relationships with real estate agents from 2020 all the way to 2021 because all the other loan officers were sitting inside refinancing everybody. And then what happened is the rates started to increase in 2021. And within my segments, I started getting really busy with financial advisors. I would have never have thought that they would be as busy or as much of an impact on my business today as they have been. They account for 62.5% of my closed transactions over the last 2 years. So as I started to see rates slightly increase, I started to see a major drop on referrals coming from real estate agents. And all of a sudden, my financial advisors became very heavy with referrals, and they started to flood me with deals. So everybody else in the market went and chased real estate agents when they weren't even that busy. And I could see that they weren't busy because I've got my established business model that I'm teaching in the course. I started to organically get busy right within this window. So real estate agents get less busy. I start getting busier with financial advisors. And what that allowed me to do is take the majority of my day and focus on financial advisors. So for the last 18 months, 62.5% of my business has come from financial advisors. I still am not competing with other loan officers in this space. So I spend the majority of my time right now growing financial advisors, and they're keeping me busy. Now what's happening is I'm starting to see my financial advisors call me for different reasons. They're looking for a lot of cash out opportunities. So what this is telling me right now in today's market, which is September of 2023, I'm starting to see that the financial advisors are calling me with cash out options. And when those cash out options are starting to pick up, what I'm naturally going to start doing is now I'm going to start selling refinances to my clients. And now I'm going to sit down and do certain assessments with my clients. So once we build out these 7 different segments, you're going to have establishment across the board so that no matter what happens in the market, you're going to naturally start to get busy. Once we've got those 7 different segments built out and we've got the mental mindset in check, then we start to actually develop on relationships. This is where I teach you how to find relationships, how to build relationships with people, what type of events to go to. We teach event hacking. I teach you an 8 touch point process for building relationships with these people so that those relationships become more organic and less salesy. When we make a transition in our business to focusing on relationships, there's more trust in the transaction and the deals tend to come in with less micromanagement. And then once we've got those relationships and you decide that you want that person in your life, that's where we add them to a process that reverse engineers your sales for your added value. And now what we do here is while you continue to build relationships, we automate your sales pitch. And what we do is we reverse engineer these referral sources to teach them how you're going to help them make more money. You're going to have a bigger impact on their business opposed to coming in and offering products. So what we do is we correlate how your products can help them become more wealthy. So as an example, if we meet a financial advisor, we're going to talk about much different business solutions with that financial advisor than we would with a real estate agent. And everybody has to go through a different onboarding process. And the reason why we don't add them to a marketing campaign from January to the end of the month is because if you meet a financial advisor and a real estate agent in January and you're just letting your marketing division or you're sending out your monthly emails, and then you add more throughout the year, and then you add another financial advisor in November and a real estate agent in November. If they missed all of those previous messages, you're not going to deploy them again because then the people that are in there, they're going to see redundancy in your messaging and they're going to unsubscribe. So what we have to do is create a system that drops them down an educational funnel as to why you're going to make them more money. And then when they get to the bottom of that funnel, that's where you continue to update your database relative to specific relatable industry updates. So home equity line of credits, that might be a great product for financial advisors. I don't necessarily think your real estate agent's going to care about that. However, maybe you see a drop in interest rates and you want to blast out your real estate agents right on the spot because that's going to get them to think about you sooner because you're bringing real-time news to them quicker. So we develop a different way that we onboard these relationships. Now, the typical process takes about 6 to 9 weeks. On average, it's about 8 weeks. And we take that entire time to implement all these strategies into your business. We teach you mindset. We teach you branding. We teach you business development, pillar segment build-outs, touch point systems, relationship building. We teach time blocking, accountability. These are all CEO type behaviors in order to get your business on board. But during that process, you and I do a lot of one-on-one coaching because I don't want you to just learn the information. I want you to absorb it and implement it into your business. So I hold you accountable for making changes. And then we run scenarios or we run concepts through each other to make sure you're not wasting your time or going in the wrong direction. And again, this process can take about 8 weeks. However, our relationship goes on forever. You don't have access to me for 6 weeks, 8 weeks, 9 weeks, however long it takes you to get through the course, and then we stop talking. You and I continue to work forever, because my goal is to get you to a new problem and trying to figure out how to develop a company or a business around your problems in order to reduce the amount of time it takes you to get your deals done so that you can continue on and grow your business. Right now, I do north of 50 million a year, and I probably spend 2 to 3 hours a day on my mortgage business. Outside of that, I spend the rest of my day coaching, and then I do some real estate development, but I'm passive on that. I'm not over at the site picking out stone and doing all these things. I just let it go. I want to make sure you understand the value that comes in the course. It's called the 1%er. Our goal is to get you into a top recognized 1% in the nation through Scotsman Guide, and we do that by developing a real business model. We're not just going to focus on making 500 phone calls a month and reporting your numbers to see if you're building relationships with real estate agents that compounds the stress over and over and over to the point where you find yourself wanting to get out of the industry. This is a real business model. This is depth. This will add way more to your business so that you can reduce the amount of risk that you will continue to see for the rest of your career, because this is real estate and we go in and out of housing cycles.